What is going on, Chi fans? Am I hearing an
Hey.
echo? Are you hearing an echo, Lisa?
No.
You're not, right? Okay, good. Because for some reason I'm hearing it. I don't know why I'm hearing it. But let me just do something real quick. Hopefully everything's doing. Oh, oh shoot! What the heck is going on? Okay, let me just do some stuff real quick while we're waiting for everybody to log on. Let me just do some stuff right now. And then we can start this thing. How was your day so far, Lisa?
It's been good, even with this crazy bipolarish weather, right?
Uh-huh.
It's been
Mm-hmm.
good. We've been getting. I'm sure you feel the same way because a lot of those clients are from you too, Tia. But people are getting interested, going back to home buying and
Yeah.
whatnot. We have quite a few people that are selling their homes, moving to different areas as well,
Mm-hmm.
making that transition. So this year uh, is a interesting year. It's Jubilee year. A lot of people are taking advantage of it and really maximizing the renewal, the refresh,
Yeah.
start over type of thing.
It is very busy. I'm very blessed that, I started the year very busy.
Yeah.
Um, so with that, it's just I don't know what to say. I'm in awe of all of my clients that refer me business, friends and family, I'm so I'm so blessed. We started the year really good and so I can't complain.
Yep.
2025 is starting great.
Yeah. I totally agree. I think people are getting an understanding that waiting is not ideal anymore, and they're just taking that plunge now.
Yeah. Nope, I agree. Um hey Gray, how's it going? Welcome to the show. We are just doing some sound check right now, sharing some links and all that on Facebook, social media, and all that, waiting for everybody to log in. And then we can get on with today's show about taxes, market update, all that good jazz. So good to have you on, Gray Flag. And Lisa, I think your camera went off, or did you turn it off? Oh, she probably turned it off. Well, you know what? While we're waiting for her to do all that, I think. Okay, you're back. Did you turn your camera off, or did it go
I
off
did
on?
for a second. Yeah.
Okay, got it. Okay, good. It was you. It's not the network shutting down.
No. I know the rain is kind of funky. I had to plug in my laptop. I forgot to do that.
Okay, good. Well, first thing first, let me just do a quick market update, and then we will show everybody who the guest is today. You guys already saw his picture, his great looking headshot on the thumbnail already. You guys probably already know who he is. But before we do that and introduce the guest and talk about today's topic, let's just do some market update, see what's going on in Sacramento County so far as markets, sales, pendings, all that. Okay, so let me just stop talking about myself and get on with this. Okay, look at that chart. Inventory is getting low, Lisa, but it's trending back up. It's trending back up. Inventory went up this week a little bit, like by zero point 0.7. New listings are down 8% from last week. Sold homes are up though, by 9%. That's good. Pending homes are down a slight from last week, zero point 0.5. But from last month, we got more inventory this month than last, almost 10% more. But we did also have a drop in new listings by 10% also. Sold homes are down almost 2%, but pending homes are up this month by 56%. That's how you know it's getting active again. Everybody's done doing their taxes, income tax, whatever that is, holidays, and they're ready to get the ball rolling again. That's why you see this going up 56% from last month.
I don't know if people are finishing up their taxes just yet. I
True,
think people,
true. I think
yeah,
everybody's kind of Huh? Because of all these
Yes,
new changes, right? New president, new
yes,
changes,
yes,
and all that.
yes.
So I
Mhm.
think that's probably what's going on. And hopefully today's guest
Yeah,
could answer some of that and
yeah,
clarify all that. But inventory this year compared to last year, same time, we have 40% more. New listings, we have 37% less this year. Sold home is 40% less this time around. Pending homes did not change one bit. Pending homes did not change. Um, Year to date, well, it's gonna look identical to this because we're only 2 months in, so we don't really need to cover the year to date. Let's
yeah.
go on
I
to
mean,
the
technically, we're barely past 1 month, right?
yep,
And inauguration just happened like less than 2 weeks ago.
yep,
So I'm not surprised.
yeah. But average days on the market did go up by 25% from last week. On average, 54 days for a home to go off the market. Last week
Yeah,
was 43 days. Okay, interesting. Um, this month though, as a whole so far, again, it's only the beginning week of February, so it's not gonna be that accurate. It's saying 42 days on average for a home to go off the market. Last month was 46. And then last year, same time, it's 35 days. So it's a few days give or take. That's
yeah.
not huge enough to make the market change into a different direction. What's going on, Chimney? Glad to have you on the show, man. So yeah, few days is not gonna make the direction of the market go to a bearish market. It's still a seller's market, y'all. I know. I know you guys are all disappointed. I know. I know. But average sold home is down for this week by 1%. I mean, I'm sorry. Active price is down by 1%, but sold price has gone up 10% from last week. 10%. And from last month, it's gone up 5%. Again, it's only been a few weeks in February, so that number may change once we get closer to the end when there's more data. But as of now, 5% more than last month. Because last month was a slower season, right? And
Yeah.
last year, same time, this year, it's higher by 1%. Look at that, y'all. The market is not going down like what everybody says.
Mhm.
And I know a lot of you guys are disappointed about that too. I know. I know.
Chia, when you say what everybody says, are you talking about everybody on the TikToks, all the advisors?
That, yeah, of course. All those gurus that's getting all the
Yeah.
audience to believe or get scaremonger, into believing that the market is going to go down.
Do you ever wonder, I was like, hey, could we even ask those TikTokers, hey, just wondering how long have you been in the real estate business to give us this insight of the market going down?
I don't think that's ever going to be a real thing. And I think when it's a conversation between behind closed doors, the
Yeah,
conversation may change, but in front of the hundreds of thousands of viewers, it's just to get clout, to get clicks.
exactly.
So, yeah. Active. Wait, no, I supposed to go here. Months worth of inventory. We are at 2 months. If you guys see right here, again, this is not really that accurate because we're only a couple weeks into the new month. I mean, a week in basically. So this is not accurate. It's saying 3.7, but I don't really believe that. I think it's more into the 2 months. Okay, for
Yeah.
reality wise, I think that's more accurate. Okay. And same time last month, it was 1.5 months worth of inventory. And even if it was 3.7 months worth of inventory, again, and I know I sound like a broken record, but it needs to be consistent
Yeah.
for like at least 6, 7, 9 months worth in order for the market to really take a turn. And you don't really see that. You don't really see it. See how it's kind of going up, going down, going up, going down, and going back up. It needs to be consistent in order for the market to really, really start to change. So that's the market update, y'all. And if we were going to the mortgage sector, look at that. Look at the mortgage rates today, as of right now.
Yeah. It started going down again today. It was sitting in the beginning of the week at roughly 7.11, guys. Okay. And again, it's not a huge difference. People are looking, I was like, oh, the rates are going to drop. They're going to drop to 5%. No, no. When it drops, it takes a while for it to drop. When it increases much, much faster. So seeing that it's going right now, this is the first time that we've seen it in this year, which is great. Okay. Great news. Job reports are going to come out tomorrow, and that could absolutely change this swing. So again, don't look at the interest rate just as up or down. Look at it as like whether or not it's affordable for you. Okay. And if the payments is comfortable, then I would say take a look at what's available in your area, what homes are available. As like showed you, there's not that much inventory still. Okay. Not that much inventory at all. So if you keep waiting, it's not going to be favorable. And many people are finding that, and they're jumping back into the market already.
Yeah, that is the truth. And like what Ching said, yeah, market isn't turning, rates ain't changing anytime soon, so go get used to it. It's been like this for a while, again, a lot of gurus are saying the market's gonna crash and all that, and it hasn't yet for the past 5, 6, 7, 8 years that I've been in real estate. So there you go. It's just been trending up, and rates just been trending up too. So that is a market update. I don't want to take too much time from today's guest, y'all. I want him to just come on in ASAP so that way he can introduce himself to you guys. He is the one in charge of putting me in check, handling all of my taxes year to year. So I trust him with all of my number figures and everything. He is gonna make sure I don't get audit and all that. So he sometimes he doesn't like me because before I make any big picture purchases or do anything like that, I'm always reaching out to him and say, "Hey, Tito, should I do this? Should I do that? Can I do this? Can I do that?" And so he's my go-to guy for anything tax related. And so, here he is, Tito. I pulled him away from his family. Normally he be home, but around this time of the year, he's very busy with people's taxes, and he's taking time out of that to be here with all of us today. So if you guys have questions or anything like that, you guys gotta take advantage of this situation and ask away because Tito is a busy guy. I'm telling you, he's doing 1,000 things in Elk Grove, okay? Not just taxes. He's in so many organizations. So yeah, just take advantage of this time. So Tito, man, why don't you introduce yourself? How long you been in the game? And all of this.
Thank you, Brother Chia. Hello, Lisa. Good to hear from you guys. Good to see you all as well. Happy New Year. Yeah, man, 2025 is already here. We just finished, we as a community just finished Lunar New Year celebration in Elk Grove Park. I looked around and see you guys out there. I'm sure you were running around looking for shades or
It was
umbrellas or
raining.
whatever because it was raining like crazy. But yeah, taxes already started. January 27 was the first day, and folks were looking for refunds and claiming earned income credits and all that are already in. And those who are like Lisa's and the Chias of the world with properties and incomes up the yin yang, they got their accountant looking through all the bookkeeping and all that. So that takes a while. But yeah, I'm here to answer any questions you have. I'm looking forward to addressing any, I don't know, myth or misinformation that you guys see and watch out there. I'm an enrolled agent, IRS, almost 20 years, and just finished a couple audits recently with some audit clients, and love to share with you some insights when you work with the IRS and dealing with audit cases. And you have clients who look up to you to make sure that they don't get audits. That's the kind of perspective and value that you look forward to, right? Just not just get me safe, but if God forbid anything happen, give me some insight and protect my interests and get me on the right track. And so with the new administration, President Trump, he's cutting all kind of budgets. You guys saw that. So man, I haven't seen an IRS agent looking scared because they put the freezing on hiring, and the 87,000 agent that they talked about with the new funding last couple of years. Well, there's a halt on that. So even though it's been allocated to spend towards customer service and tax support and tax prepare and tax preparations and refunds and all that, you're going to have a hard time getting a hold of the IRS customer service. And I guess one good thing is I don't think they're going to do as many audits out there as before. But if you do, you know who to reach out to. Um, is that
Are you still taking clients, by the way, man? You're so busy.
no, no, I'm not taking new clients, but I'm saying that, and then people comes up, and again, if it's something basic, I don't have a problem giving free advice, and
Yeah,
everybody's situation is different, you know, and you don't always get a second opinion with anything else. Nowadays, there's so much information out there, you know, and I'm not saying I know everything, but I think when you do things for 20 years and having a relationship with the clients and the community and the IRS, and you knowing, you know, both sides of the game, right? The perspective of the taxpayer and the businesses, and perspective of the IRS and the tax law and the tax court, you feel confident that you get your community in the right track. It is, you know, this day and age with social media, there's so many misinformation out there, and a lot of it is just like you say, clickbaits. The devil is in the details, right? A lot of things
yeah,
in theory looks good and maybe could be deductible, could work out, but when you start putting the numbers together and see how things unfold, then the answer is totally different. And no IRS agent or no accountant is going to go out there and tell you everything in black and white. There's always exception
yeah,
to the exception. There's always things that are subject to change. And you know, with 2025 being the last year of the tax reform that Trump passed, a lot of the stuff is going to re sunset. So next year is going to be a whole new ball game, not just because of the new administration, but because of the last law that was basically going to expire. So things will be changing really fast. But I think Chia and Lisa as well. We got to be proactive. Can't just
yeah.
wait at the end of the year to react to things. You know, you want to make it big. You want to build your nest egg. You want to be successful in your
Why you
business.
busting my balls, man? I know I need to turn in my tax documents sooner, but stop busting my balls.
No, I'm not, bro. I'm not. We're learning. Some of us take 20 years to change, right? But having said that, there's empathy, there's understanding that
Yeah.
we're learning as much as we're sharing with our folks, you know?
Yeah.
No, I appreciate you and your team so much. You have no idea. Like my wife is always getting on me, like, "Did you call Tito? Is our tax due? Is it time?" So like, it's I we appreciate you so much, and like, dude, like you have saved us so much money. And I tell people this all the time. You don't hire a tax person to like to because for the sake of just doing your taxes. You hire a tax person so that they can help you save money, because there's a system, right? We're playing a game, and there's a system to where if you don't know the rules, you don't know how to play their game. And having you as part of the team helps so much for us to be able to level the playing field, right? Because there's so many people out there that are doing it wrong, and or they're doing it themselves to try to save a couple $100 when they could
Mm.
be saving thousands by hiring someone like you.
Right. Well, I mean, thank you, Brandon. I appreciate that.
Legally, okay?
There's a ton of us out there, right? There's a ton of us out there, but I think the difference is that we serve a certain community, right? Our community,
Right.
mostly immigrant and refugees, and sometimes the laws and regulations are not something we're used to, right? Things that
Yeah.
we know that we have to follow and be in compliance with, and there are always I don't know how to say this, but misconceptions about a certain community, how there are myths and there's I don't know, there's things that we always certain people kind of spread falsehood, and all of a sudden within this community it pick up like fire, and all of a sudden now everybody thinks that's fact, right?
Hmm.
And so I think
Like those
social media does the
headlights.
same thing, but it's more pervasive in our various communities. So I really feel like some of us, a lot of us have gotten to a certain level in our life where, we gotta start giving back to the community, not just being there, but get us on the right track, right on the right path. Starting with facts and starting with the right, best practices, doing the right thing. These are not rocket science, I mean,
Mhm.
being organized and understanding strategies and save and invest, and understanding like there's within the law, there are certain parameters that you don't want to cross. And but at the
Yeah.
same time, knowing who your preparer, who's your accountant, whether it's a CPA or an EA or a certified tax preparer, have they been on the other side? How are they going to protect you when there's an audit? Or don't just do my taxes just based on whatever happened last year. How am I going to save taxes next year? How does this tax help me with my overall financial well-being? Right? How does this help my family? I don't want to just every day becoming, a data entry person. I want to be able to start using stack tax strategies to maximize my leverage that into something like greater, earnings or things like that. I don't want to get too much into the weed. As you also know, I'm also a financial advisor. I've been doing that for over 20 years as well. But financial planning is a little tricky. We don't really talk about that on the radio, on
Hmm.
TV, because our situation is different, and we're they'll definitely being scrutinized, and there's a lot of due diligence and compliance that we have to follow. But I'm a little more flexible with the tax advice because, again, as an EA, we can do more. But as a financial advisor, you really have to know your client. And in a setting like this, we can't give too much advice in that regard. But,
Yeah, yeah. See,
speaking
so that's
generalities.
some of the thing that's been hard for me and Lisa, right? Because sometimes we get a lot of our clients that will reach out to us and be like, "Hey, can you guys share some information for tax purposes?" And we'll be like, you need to consult with the CPA because there's certain things we know and we do, but it's because it applies to our situation, you know. So that's why I
Right.
want you to be here because there's a lot of questions. Obviously, we have a few that's already on the chat and maybe we can answer a few of them now. And then there's also more on my social media that we're also curious about their own unique situation. So that's why we have you here, man. So I appreciate being here. This is long overdue. We need to have you here like every year or every time whenever there's a new tax code change. We need to have you here so that way you can educate the community, right? So
Yes, sir.
speaking of Irv Green, you know, he has a question. What's up, Earl Green? Thanks for the questions. If you already have talked about this, I just arrived. No, we didn't talk about anything yet, so you're right on time. Trump will be able to lower interest rates for the home loans. That Lisa, that's for you, I guess.
So I can't speak for Trump, right? I can't speak for that. I don't know if he's going to actually do that. That's something that we're going to have to wait and see.
Yeah, nobody knows, but I don't think he can.
Yeah, I
But
mean, we don't get to any secret messages from him ahead of time, just so that you guys know.
no, yeah, we don't work with him directly. You know, I wish
Yeah,
we did. I wish we could just call him on speed dial or something, but I don't think it works that way.
yeah, exactly.
Yeah,
Wish I
well, the
can give you.
president doesn't set interest rate. It's, the Federal Reserve, but I'm sure he'll put some
Yeah,
pressure on them. They're supposed to be
Yeah, yeah.
independent, but yeah.
Yep,
yeah.
it's supposed to be independent, so that way there's not too much, you know, conflict of interest, you may say. Cheng says, "What are some other things I could write off my rental if I'm only writing off the minimum things such as depreciation, tax, and insurance?"
Yeah, hi Jane. Well, definitely think of it as a business, right? And there are some criteria whether you're actively participating in it or you're passively just renting property on the side, whereas you have a regular job, whether you're a real estate professional or real estate broker, those classification does treat your deduction differently. But as far as the items, when you think of a business, you think of anything that's ancillary to the business, right? You're talking about, using your car to go to the rental property collect rent, right? And so some of this mileage are deductible. You're talking about advertising for your rental property, talking about, like you mentioned, insurance, repair, maintenance. I want to say HOA fee if there's HOA fees. Trump is a real estate guy, so when he passed this law that we're under, it was very beneficial to real estate investments, and so there was not a lot of cap. There's a limit to how you can deduct on your primary home, but very minimal limitations on deductions on the rental, except for the fact that if you are actively participating in it. As you mentioned, depreciation is a big part of the deduction on your property. 27 and a half years if it's residential and 39 years if it's commercial. But just because you bought some appliances or some fixed asset for your property doesn't mean that you get to deduct everything one time, right? There is a depreciation schedule that you can use to deduct certain item 5 year, 10 year, 15 years. Some people even accelerate the deduction by using cost aggregation. So there's so many strategies out there, but if you ask me, Chang, what are the list of items, just look at, you can even Google this. What are the deductions that I can claim on my rental property? And you can see all the items and things that you have on there are the major ones already. Mortgage interest. Let me see here. If you bought the property recently, look at the client closing statement. I'm sure there's some points that they charge. Those could be amortized and depreciated. Let me see here. There's some closing costs that could be added to the basis, so that increases your depreciation basis. Does that answer your question? I hope.
We'll find out if Chain responds back. But let's keep
Okay.
this going. I appreciate the info. That's a lot of info that went over my head. So I'm glad you're here.
Yeah.
This is from Durr. Trump saying he's taking income tax away and Kerry is going to support the government. Notice people going to hold out on filing their tax because of this. What's your thought? This is more my
That's
curiosity, the tariffs.
yeah. To be honest with you, I'm a practitioner, so that means that I'm out there in the front line dealing with the IRS on a daily basis, representing taxpayer, right? So, and I literally had a meeting with the IRS 2 weeks ago on a mutual client, and again, they know the effect of the new administration with the whole cutting of the budget on federal programs and federal agencies like the FBI, the CIA, and even the IRS. But I don't think he ever mentioned anything about not, collecting taxes, or, not having even the current tax code being eliminated. Tariffs gonna, in somehow, some way, generate revenue to pay for certain program. It doesn't mean that it's going to take over the tax revenue that they could normally collect from taxpayer. So again, this is one of those cases where you can actually say this is a hearsay, or it's just too far fetched. As you can see, if you watch the news, there's all kind of stuff going on out there right now. But everybody knows you're not gonna mess with the tax system. You're not gonna mess with tax collections and tax money. It's too entrenched in our system, right? Not just the fact that the revenue that it generates, but the people that are involved and connected to it.
And not just that too, but a lot of these clickbait news channels, they're trying to get clicks and clout, right? So they're gonna give you like a good headline that is gonna make you want to click. And the president still has to go through Congress anyways, right? See, look, Tito's so busy, he's with his kids.
Sorry, guys, I got a little interrupted here with babysitting the kids.
All good. All good, man. This is the rawness of our life, dude. I'm surprised my son's not banging on doors saying, "Daddy, daddy."
Sorry about that. Go ahead, sir. Yep.
All good, all good. Hopefully that answers your question, Dirk. Again, if there's something else that we missed, just ask away, okay? That's why we're here tonight.
I just want to clarify one thing real quick. Sorry about that. If you are holding off on filing taxes for that reason, please don't do that. The deadline is still firm. We got the March 15 deadline for corporations and LLC and S Corp. April 15 is the deadline for personal return. If you miss that date and you give the IRS an excuse like President Trump told me not to file taxes, it's not going to fly very well. So yeah, please don't do that.
Yeah. If anything, you can still amend, right? For like, right? We're gonna get to
Right.
that because somebody's asking that question right now.
If anything's wrong, and a lot of times you feel like whether you did your own taxes or somebody else did your taxes, and you felt, hey, there's certain things that's not doesn't seem right to me, not kosher, or doesn't pass the smell test. You can always have professional review it, and yes, you do have the chance to amend any tax return back to 3 years. You can amend back even further than that, but if they owe you a refund, they only go back 3 years. So yeah, this is America. There's always ways to appeals. There's always ways to get a second opinion. There's always ways to fix and abate and correct things. So, but that limit is only 3 years. Okay. So if we're talking about 21, 22, 23 now. So anything past 21 tax year, they can't do anything about that. But if you need to review and change and amend anything for that up to 2021, you have until April 15 to do it. Yeah.
Yeah, so don't hold out on filing taxes, okay? We're not liable for any of that. It's a copyright that Tito's saying right now. Evergreen, I'm thinking about putting my car on Turo. Is there negative consequence if I don't have an LLC and just make money all year and report it at the end?
Yeah, Earth Green. No, that's actually very common nowadays. Everybody trying to, take advantage of the side gig, whether it's using their car or using a third party, whether it's Toro. You know, and that's like another version of Airbnb, but just having to be using your car to rent out to clients. There's a couple of things. Operate that as a business. You don't need an LLC. You don't need an S corp. You can operate that as a sole prop. I'm not
Mhm.
sure if you want some stranger to go into your car and do whatever they do with it. You know, I'm sure there are times when we rented cars before and we wanted to floor it because we wanted to see how good and fast it goes, right? Well, that's my nice car that I bought thinking that's my baby, right? I shouldn't want to rent it to anybody else, but that's my feeling. If you want to share that, that's no problem at all. If you're able to generate revenue, take into account the depreciation, the wear and tear that it takes on your car, right? The fact that somebody's using your car, you don't know what they're doing because you can't really see what they're doing. And the revenue that you generate, because keep in mind, Torah will take a commission out of this. So I get it. You know, there are some deductions that you can claim. Hard to claim too much on a car because you can say, hey, based on the car value, it depreciated this much based on the fact that I rented it out. I had to spend money on cleaning it or repairing it, fixing it. The problem is that you mix that car with personal use and business use. So you got to have good track record of what is being used, when it's being used, and how those expenses relate to the time that it's being used as a rental versus the time that you're using it as a personal vehicle. So that's the tricky part.
There you go, Evergreen. Thanks for your comment. Chain did say thank you.
Welcome.
And Chang says, how many years do we have to man? Okay, 3 years. Yep. So he did mention that already. All right, let me go to the questions from social media while we're waiting for more comments to come in live. Okay. This is from a couple hours ago when I made a post. We'll just start from the top and go down. Okay. Yao Gao News says, how does it work for a nonprofit to be the owner of a profit LLC company? You see it?
Yeah, I can't see it. Sorry, my eyesight's bad, but I think I get the gist of your question. You got to understand a nonprofit, if by definition, is not profit driven, right? Or not nonprofit based on whether it's a 501c3 or 501c2 or four or whatever, based on this classification. Its purpose is to serve the community for the benefit of the community. So if you mix anything that is business driven or revenue generated for your own benefit or for a profit, then you're basically going against the mission and the goal of that nonprofit, and you might have your status revoked. So don't mix any business with nonprofit activity. The compliance requirement is quite high, especially when you're running a nonprofit. If you notice the 990 tax form, it asks everything about the nature of this business. What does it do? The three top project that it provided or served for the community. Who gets paid what vendor do you use, and are there any conflict of interest? Is there a program set up to create any type of whistleblowing or any type of compliance? I mean, it's just extensive in the way you ask questions. Once you run a nonprofit that's over $50,000 revenue a year, those tax forms will get more complicated. But if I were you, do not mix business with nonprofit activity.
Mm.
Makes sense. Vapor says they're not going to answer that. Hopefully, we answered it, Vapor. And then she goes, I'm dead serious. I'm ready to restructure my company. Okay, we shall see. Oh, that's why I said it. Those gotta play the questions. I know this one. I already have the
Maybe I
answers.
can address one thing. Now, it doesn't mean a nonprofit cannot do business with a profit-driven business, right? You can. I run a nonprofit. Maybe I need a contractor to provide health, so maybe a consultant to provide mental health counseling for my clients, and that person or that company who provide mental health support is a private company. There's nothing wrong with that, but there's an independence between what we run as a nonprofit versus the
Mm.
vendor that we use to provide support for our community. Does that make sense? So there's two
Mhm.
different things, but you can't mix your personal nonprofit organization with the business that you have, you know, as a profit entity.
That makes sense. Chu Vane says, I'm not a tax person, but from my limited understanding, the LLC must be wholly owned by the nonprofit, and the LLC's activities are like of the parent nonprofit to be eligible for federal tax exempt status. state tax will differ?
Yeah. Well, number one, corporations, nonprofit has to be a corporation first, and then get classified as a tax exempt status. So it has nothing to do with LLCs, and nonprofit cannot be owned by an LLC. Okay.
Hmm.
So people mixing business with
Mm.
personal again.
Wow, I never knew that. Okay. Tracy says, I want to file. How do you file for LLC business with personal tax?
Well, it depends. If you have a single member LLC, for those who doesn't know, it's a limited liability company. It's a classification that's quite popular, mostly in California, for a business entity that allows you some level of what they call asset protection. Meaning that if you own anything under your name as a sole prop, anything happens to that business, whether it's lawsuits or liability, it's obviously you're subject to that. You're subject to lawsuit. You're liable for any type of misdeeds or any issues or problem that comes with that. If you have an LLC, there's some level of protection. And again, I'm an IRS agent, a financial advisor, but I'm not a tax attorney. And some of these stuff you can consult your attorney for more in-depth understanding of the LLC formation and LLC structure. But for the most part, people tend to do businesses, don't understand the difference between an LLC and S corp or a C corp. And so I would say do your research, give people like us a call. It's easy for me to talk to you in person or over the phone and trying to understand your situation, the nature of the business that you want to start, the nature of your tax strategy or overall business strategy before we can say which one is better or whether you should do it or not. We do a ton of formations here, and having a partner who is a tax attorney makes a big difference too, because there's a support for us as well. And I coming from the tax planning strategy where we try to implement the strategy more for the LLCs and S corp than if you just have a sole prop where there's not much you can do as a sole prop. But there are situations where you don't need LLCs and S corp, right? Normally, the gist of it is if you're buying properties, I would recommend that you put those properties into an LLC. If you have an active business that basically generate revenue and have employees and things like that and payroll, I would say S corp is a lot better. Yeah, but there are some business where you're just a startup. You can always start as a sole prop, and nothing wrong with that. Our Grove charges $16 to start a business. $16 is a business license.
There you go, Tracy. Hope that helps. Let's go to this question real quick before we move on. Shane says, what kind of form or where do I add the expenses if I went out of town to see a potential rental property?
Well, it depends, Chad. If you are classified as a real estate professional and you have a rental already, then that's kind of justified for your travel, right? So it's hard to say because it's kind of like a blanket statement that if you're just going out of town, that you're assuming that those expenses incur are tax deductible. I think two things that you always have to ask yourself when you incur any expenses and trying to put them on your tax return. Just to answer real quick, the form that you're talking about, if you have a property already and you are deducting it, it's schedule E for electronic, E for I don't know, ear. But you need to ask yourself, is this travel ordinary and is this travel necessary part of my business? Do I need to go, I don't know, to Asia to look for a property when I have no properties at all? I have no licensing and permit as a real estate professional to even start thinking about deducting travel expenses that abroad. Or do I go to Nevada and say, okay, I went to Nevada and incur this much expenses where flight, travel, car, hotel to look for a property where for 7 days or something like that. You know what I mean? It has to be reasonable. Does it make sense? Is it ordinary part of the business where I'm operating as a rental business capacity? Whether you're a real estate professional or not, you can still operate as a rental business. But does it make sense for you to go that far and incur this much expenses? Now, for the most part, if you incur a couple hundred here and there, 1,000 there, and maybe you can explain, yes, I'm a professional, but no, I'm working towards it. IRS not going to worry about the minimal stuff, right? But if you're talking about thousands and thousands of dollars, just because you have expenses and receipts for it, doesn't mean that's ordinary or necessary part of the business. So that means they might not allow you to do that.
All right, all right, all right. Again, if you guys have questions more that we haven't answered by going over all these questions live, just shoot them in the comments. And towards the end of the video, I don't know how comfortable Tito feels about this, but he could kind of do like a shameless plug of his contact info, and you guys can reach out to him too. Again, I call him all the time to ask him questions about things I don't know because again, I don't know. I If you want to buy or sell a home, I know about that, but tax, I'm gonna shoot you this to Tito. Somebody like Tito. So yeah, we'll
Gio,
see at
I
the
think
end of
I
this
think I
video.
think you know more than you claim, brother. You know more than you claim. If not,
No,
I'm
I
not doing
know.
my job.
Even if I know more than I claim, I'm not gonna say it because I'm not a legal licensed person like you. So I'm not technically able to say it, kind of like lending. I'm gonna leave all that to Lisa. She has a license for a reason. She can say it. I can't legally say it. Things like that. So we just fall in that umbrella. So we just kind of gotta watch our butts. That's why people like me exist to help you buy or sell. People like Lisa do loans, and people like Tito do your taxes. All right, next
And honestly,
question.
yeah, I mean,
Lisa?
I can totally attest to that. I think you and I pretty much take up so much of Tito's time asking so much questions because a lot of times we ask it for our clients too. And Tito's been so generous in that. I've asked him many times, especially when their tax accountant is not as readily available or as knowledgeable, and not everybody's the same. Tito, I'd like to ask you because Tito actually has helped me set up my LLCs, and with your corporations, with nonprofits, with your taxes, you can do it on your own. However, because it's not my area of expertise, I highly depend on Tito to set it up properly so I don't get audited. I don't worry about that stuff because if I get some funky mail, I will text him and say, Tito, what is this? Please tell me. He's like, don't worry, I'll call the IRS for you. I was like, okay, great. I'm good. Okay, I'm in good hands. That's one. Tito, because you do the LLCs and things like that for us, do you also, because I know that you run so many great nonprofits, especially here for the community, you're so community centric. I am actually looking to have a nonprofit organization. And really for me, it's more of like, because as you mentioned earlier, financial assistance and helping homeowners and everything like that. I kind of wanted to set something up because she and I, we talk a lot about down payment assistance programs, some that are great, some that are not so great. So I was actually hoping to do some sort of financial wellness organization to help those who need, credit repairs, those who need to understand how to save money, how to grow their money, but also what can we do to benefit this so that maybe perhaps down the line, we can also create ourselves a down payment assistance programs for the community. Is that something that a tax accountant or an attorney can help us with?
Oh, definitely, Lisa. A lot of us, and that's the sad part. Sometimes, you're willing to pay. There's somebody else willing to do it for you. But to be honest with you, I do see a need in our community for empowerment, knowledge-wise, to even just having a good, I don't know, resources like people like us, right? But also a way to create capacity to help generate revenue so you can, like you say, help with down payment on a home, understanding the cost of buying a home, understanding how lending works, credits and all that. The problem with a lot of us is that automatically we want to go out there and do a nonprofit organization, right? And I'm not saying I'm against it because I work with them all the time, not just the capacity of me being active in our nonprofit organization, but also as their accountant, as their advisor. And there's a ton of organizations now that are doing what we're doing, and we can always collaborate with them. They already got their 501(c)(3). They already done the paperwork. And again, we don't want to reinvent the wheel. The wheel is already invented. We just got to make it better. So I think before we do something like starting from scratch, let's look at around our community and see what organizations are already out there as a nonprofit that we can provide some capacity building with them, some collaborations. And then, we know our community best. We know what our demands of the work that we need to do for them. So we go out there and do the work, whether it's an outreach program, whether it's a forum, whether it's I think there was many outreach program at churches and community center that we used to do a long time ago when the market crashed, right? I know I've been so busy, but I haven't seen this program out there lately. But there's so much for us to do. And I think that the community have gotten a lot bigger than maybe 10, 15 years ago when, Sacramento was such a small community. Now Elk Grove had gotten so congested and population growth is abundant. But I really feel like we're not there yet. There's still a lot of us that are still looking around, figuring out, how to even own a home or how to build wealth or how to establish, a nest egg or build, a piece of, set a strong foundation for ourselves and our kids. And, automatically we go to like places like Asian Resources or AOI or VACOs or whatever. And those organizations are very limited in what they do. So let's collaborate with them instead of maybe building our own nonprofit organization.
Right. I mean, that's a really, really good and fair point, Tito. I think it's more for some of us who are like, hey, we don't want to, it's not that we don't want to collaborate or anything like that. Those are great organizations. You're absolutely right about that. But sometimes because she and I, we see certain things on a daily basis, and to really express that and say, hey, can we focus on this? And some of these organizations are so broad and we're like, well, we want to help everybody. It's like, great. But at the same time, our focus and our expertise is specifically in this home ownership realm, especially for elderly care. I mean, there's so many things in the housing market that is already in need of assistance that we were hoping that we can just target on people in housing.
No, I agree. I'm sorry to I might come off like, hey, don't do it or whatever. I just seen so many nonprofit, which we helped, so I helped file taxes for them. That wasn't managed well. They really had high ambition. They had high hopes and dreams of building this nonprofit into something that they really, like you said, feel very passionate about serving the community. They ended up doing is feeling like there's a lack of capacity, right? Not enough support, not enough help, not enough funding. So much about nonprofit is about building capacity, meaning, have workers and people with similar interests to come together as a team, and pulling all the resources together and leveraging the various skills and connections. Most of us don't have the time for that, right? Or we find people who are very, very passionate, but the threshold is limited or the commitment is limited and life gets in the way, or we don't have the funding to pay them, you know? So I would say help the people with similar interests, common grounds, who feel like, hey, we can run this together, but also have the capacity to know that we might not all get paid. But then we want to get paid. We might want to do a better job at, grant writing or connecting with some of the small businesses out there that believe in the same mission and vision that we have.
Right. That's good insight. Thank you so very much for that, Tito.
Oh, anytime, Lisa. Thank you. I think there was
All
a
right.
question earlier. I didn't. It was so light. It was a blur for me.
It's all good. It's all good, man. There's a question right there from Dirk. I have rentals and looking for another property soon. Lender want to see my income tax for 24. Should I take less deduction to get the deal and potentially have those extra 24 not taken this year to next year's deduction? Or maybe take the max deduction and pay less tax?
Yeah, well, with anything, and again, I give advice. Not that I know all the answers, but I help people think about, the conflict of two priorities, right? There's always a give and take in most of the decisions we make. If it's always a win-win, then they wouldn't need people like me, or life wouldn't be so complicated, right? So if you want to get that second property, then you're gonna have to show more income, right? You got to show more capacity to be able to pay your debts. And to qualify for the loan. So that means your taxes has to show some potentially high profit in there. So if you max all your deductions, which means you pay less taxes, then the chance of getting a second loan will be very low, correct? So you got to think, which is more important for you, right? What are your priorities? What's important? You can always get a second property, right? Maybe later when you have the capacity, meaning you have more income or you have higher credit score, whatnot, whatever it is that they're saying as a reason for you not to qualify. And even if you maximize your deductions in your tax return, who's to say that you're not qualifying? I would say talk to people like Lisa first. Let them look at your tax return, look at your various income sources, the various assets that you have. Some of those have depreciation that are not always negative on your balance sheet, and that shows, more of a credit on your qualification for a loan. Other deductions are more detrimental. But I would say before you're assuming that, oh, should I take more deduction here or less or do this and that, talk to people like Lisa to see, let's look at your credit history, right? Let's look at your asset, the various assets that you have. Look at your income sources, look at your taxable income, whether you're filing joint or by yourself. If you have a 1099 or W-2, people like us as an accountant and financial advisor, if you need to show more income, you can actually alter your tax withholdings or contribute to your retirement more or less based on the type of account that you have. So it's nuanced, it's complex, but I would say people like Lisa would definitely have a calculation or a formula to throw all that numbers in there and say, okay, this is what you need to do. Based on what you have, we might not be, able to qualify for this loan, but there might be other loan. Or you might have to show your 2024 income tax return to have greater income. Maybe minimize some of your expenses, maybe depreciate it for a longer time so that you show more income for that year. Things of that nature. Or maybe don't take too many deductions on your Schedule A or Schedule E because you need to show more, more profit or more, net income. So.
You
That's
know what
correct.
I
Thank you.
like about you, Tito? You're so honest, right? And you always give me a lot of advice. And sometimes, when you're doing my taxes, you will always say this to me. So, Chia, you plan on making any big purchases next year, right? Or this year? Because
Mm.
depending on my answer is going to determine how much deduction you're going to recommend me to deduct, right? Obviously, everybody wants to deduct all the maximum expense they can in their business to pay less. But
Mm.
like what you said earlier, what is your goal? You always ask me that, and I appreciate that so much. You're not just trying to answer my phone call just to do my tax, or you get paid, and that's it. You tell me
Mm.
honest advice, and you be like, Chia, what is your goal this year? You plan on buying another property? You plan on doing this? Buying a warehouse? Doing
Mm.
this? Okay, if you're gonna do that, let's file for less taxes. I mean, less
Mm.
expenses. Stop.
Mm.
Let's not deduct the maximum. You give me
Mm.
real world advice to help me strategize so that way I can reach my goals. And I
Mm.
appreciate that so much. I don't know you hear that enough, but dude, I really do appreciate
Thank you very
that
much.
so much, me and my wife, because then anytime whenever we make any big purchases, it's always let's call Tito first.
Yeah. Same here. Same here. So, I have the same sentiments and whatnot. And Tito, thank you so much for bringing that up because during this time, I am super busy. And usually between December and February, all of my self-employed people who want to buy a house, they come to me first to ask, okay, let me plug in the math for you. Whatever you tell Uncle Sam you make, that's
Yep.
how much the lender is going to look at. Okay. So it's a check and balance and everything like that. If you really want to buy a house, just exactly what Chia just said. When Tito asks us, hey, are you guys looking to make any big purchases? Most of the time, I would say 99.9% of the time, tax accountants don't ask that because really, honestly, it's not their job to know what you are going to spend on. It's our job to really know that. But Tito just goes above and beyond for us to remind us because he's seen our pattern. Tito has been my tax person for at least 20 years now. My daughter's 20, so yeah, 20 years. Ever since I moved to Elk Grove.
Yeah,
There you go, Derek.
we looked that over, Lisa.
Here's the next question from Chai. Any idea how to track and write off power expenses to charge my electric car at home? It's my business electric vehicle.
Yeah, that's a good one.
Okay, so hi, Chai. Let me try to explain. And when you mention electric, my mind just runs around in a circle because there's so many different people that use EV credits and people with homes that have a lot of electric power. They actually use that extra power as a business to sell to PG&E or to sell to other parties. And there are depreciation that you can take on those electric power grid or those what do you call the solar panels, right? So I think with this question, you're saying how to track and write off power expenses to charge my electric car. Okay, so whether it was electric car with power or regular gas guzzler vehicle, um, you have to be able to differentiate the purpose of this vehicle. Within this vehicle, did you use it to show homes? I'm assuming that you're a real estate professional. If you have a business, do you use it toward buying equipment, tool and supply? Did you use it to go meet a client? Did you use it to go seminars and training? Did you use it to whatever business activity you're using it for, right? So if you track those area, then you can track. Let's just say that within that day, I drove and see my client or did this business activity this many mile, then you can say within that many mile, this is how much electricity I use to power my car, right? So that might not necessarily be a good deduction for you because that's the nature of EV cars. That the cost of generating power for the car is not as high as the cost of gas, right? It's great, it's efficient, but if you're doing that, then why not use the other deduction, which is the actual mileage, right?
Mm.
That means that instead of actually deducting the actual cost of pumping the gas, if you have a gas powered car or in your case, electricity, how many miles did you drive to see your client? How many miles did you drive to do business activity, right? How many miles did you drive to go to seminars and training and buy supplies or whatever? So yes, there should be a contemporaneous tracking sheet that shows how many business miles you drive for the whole year. But normally what I do is I look at your odometer. I say within this window of time, January, December, you drove 20,000 miles, and then your business activity is about 20, 30, 20, 25% of that, then we rough estimate what those mileage would be. If you want an actual expense, if you have the time for it, then you're going to have to keep track, right? Point B, A to point B. I drove from my house in El Globo over to meet a client. That's 20 miles back and forth on this day. And we went over there to discuss, business activities or whatever it is. It's too, that's some people would do that. But I think it's a little bit too much to ask a regular small business person to do. So I think the estimate mileage is a lot better. I've done, and I'm not bragging, but over almost 100 audits, uh, 20 years in business, and mileage and deductions on business has always been a topic that the IRS want to look at, but stay within the parameter. Know at least what the 1 year odometer look like, and don't claim the whole thing. Don't claim an 80 or 90% if your business activity is not up to 80 to 90%. The more you can try to do is maybe 30, 40, 50% at most, and the IRS is not going to mess with you on that. They're not going to expect every detail, but stay within the parameter. Does that make sense to you? And Jai?
It makes sense because you tell me that all the time about me showing client homes.
So
So that makes a lot of sense.
Tito's Hit says this to us all the time too, because like if we don't keep a very, very thorough record, right? And it's
so
like that
hard.
threshold. Yeah, there's that threshold that Tito will tell us, like, hey, look, this is the threshold and everything like that. If you really, really want to push this, then you make sure that you have the proof for it. And I was like, and that makes sense to me.
Well, let's kind of go back to one of the questions from the post on social media. This is from Sime. He says, can you do something similar to a 1031 exchange, except for investing in funds? For example, you invest in multifamily or note fund for a few years, then you exit with your profit. Can you roll that over into another fund without getting hit for taxes? I think there are loopholes where you can roll your investment into a upright structure, UPREIT. I have no idea what that is, but maybe you do.
UPREIT, real estate investment trust, like a UP, REIT, yeah. Honestly, this is not a hi Sam. Sam, yeah, this is not a forum to go into that detail. If you want to, you can reach out to me or my tax attorney next door on when to go over that. But when you talk about 1031 exchanges, we stick with real estate investment. We don't do all these in funds and
I think
other
he's talking
asset
about
classes.
something similar to the elements of 1031, but instead of real estate, it's notes.
You're right, but you get into a realm of a traded funds that not necessarily a typical real estate asset, right? And I mean, of course, I know about REITs and I know about investment in different funds as a financial advisor, but I've never really heard of the UPE REIT structure before, and a lot of time, you know, you have all these third parties. And I just got back from a convention in San Diego, and we got over 100 vendors out there throwing different type of asset classes and investments and alternative strategies. But you got to make sure you got the right compliance to look at this and see if it meets the IRS regulations of the 1031 exchange criteria. But from what I'm seeing out here, I rather not not comment on that because I have no idea, you know, how this is related to the regular 1031 exchanges with real estate investment.
All right. Well, let's go into this one right here. This is from Yao Gao Nu again. How much money or cash can I give someone without being taxed? How do I declare this in my income tax return?
Hi, Gal. Very, very good question. I think people have this misconception that, you know, it's my family, it's my money. I give whoever and whatever amount I want, you know, but and I get it, you know. And there's IRS requirement, which is tax filing, and there's also bank requirements. You know, if you go to the bank and you deposit 10,000 or withdraw 10,000 or more, they're gonna do a CTR, right? Cash transaction receipt, right? That doesn't mean you what you're doing is wrong. It's just that they have a regulation that wants to know where this money came from, right? And so that's just part of the requirement to file those paperwork. Same thing with IRS. Basically, they're saying that if you give any of your family members over a certain dollar amount each year, you're required to report it. It doesn't mean it's taxable because there's two provisions. One is the annual exclusion, which is the 2025 tax year is 2025 years to 19,000. So from now in January to December 31st, I can give Chia 19,000 and not having to, and it's always the donor, right? The person giving it, not the recipient, to file taxes. If it's 19 or under, Chia doesn't have to report taxes on that, right? And if my wife liked Chia as well, she gives him another 19,000, that's 38,000 he doesn't have to file. But if I happen to give him 20, right? Because you know I liked him this year, and it looks like he can use an extra $1,000. Then I'm required to file a tax return because I'm giving him more than the annual exclusion. The
Mm,
19,000 is an annual exclusion. That means you don't have to file 19 or less. So since I'm giving him 20,000, that extra $1,000 is reported as gifting above the annual exclusion, right? Does that mean that me as a donor is going to file pay taxes on that, or does that mean Chia as a donee have to pay taxes on it? No, neither, right? Because there's a lifetime exclusion. That means that I can give my family member or anyone in my lifetime as long as it doesn't go over $13.9 million. Okay. And that number changes too. But man, I don't know about you, Chia, but I don't think I have a lot of people that can give up to $13.9 million in a lifetime. So yes, I have to file the 709 tax form, which is a gift tax form, and yes, all it is saying that I give more than the annual exclusion of 19,000. So 1,000 goes against my credit, but I got about 13.8 million to go, right? To your question, the donor has to file if they give more than 19,000 for this year in 2025 and 18,000 for 2024. But that extra dollar amount that you give is not taxable to the donor or the donee. It's just been put as a tracking system so that they know that you're not giving more than 13.9 million in your lifetime. Does that make sense?
I'm pretty sure it does to somebody, but not to me.
Okay,
I will call you when I need that answered.
brother.
All right, let's go on into this one. I already told you, man. Didn't I tell you 1 hour is gonna go by quick? It's already 8 o'clock. Do
Yep.
you have to go, Tito?
I didn't have to go, but I saw somebody popped up with a question that I didn't like. So, or maybe my friend C got hacked because somebody had a picture just looked just like a good friend of mine who asked a question about drawback of having a title to your home up your home by trust on LLC versus your personal name.
Yep.
You want me to address that real quick?
Yes, please
Yes.
do, man. If you have a
Okay,
little bit of
okay.
time, address this and we'll let you go. I know you're
Thank you,
very
brother.
busy. You got your kids with you, so go ahead,
Right.
man.
Thank you, bro. Well, number one thing, and I tell all my clients and myself included, you know, as somebody who have assets and accumulate certain level of wealth and have responsibility, I think all of us, right, have to have a trust. You too, Chia, right? We're in America, right? We need to make sure we understand family law, tax law, right? Trust law and regulations, how how titles or works, how properties are taxed when, God forbid, you're not there, and you go through the court with probate because the fact that you never had anything legal to hold title on your properties, and not just the fact that you have a trust to hold your property to help with estate planning, but it also gave you a chance to have written instructions how you want your asset to be distributed, who you want to take care of your kids, God forbid anything happens to you. Also, you don't want them to go through probate, right? So that's where you want to have your properties and asset into a trust. Okay. Now, the trust, most of the time in your lifetime, is probably going to be a revocable trust. So that means that you can change it later. And I don't want to cross the legal aspect of it because that's where the attorney comes in, attorney on. And a lot of our family and friends do trust setup and things like that. So I was just going to get with the superficial level of the trust, right? So for me, I've been working on my trust for the last 3 years. It's complicated. It's also a cultural thing for me because I don't want to confront difficult decisions of having somebody take care of my kids and a title and all that stuff. So I'm just saying to you guys, you have a house, you have kids, get a trust going. I don't care how much and who's it by. Getting a trust done is one thing, but funding a trust is another. So it's two big steps, and we all got to do that for our family and our kids. As far as an LLC is concerned, when I think of LLC, I'm thinking about business structure, right? Owning like my building that's under an LLC, it rents out to my business, it's under an LLC. God forbid anything happened to the rental, I'm protected because it doesn't get into my personal asset, it doesn't get into my trust. There are people who set up an LLC that owns the business property, and then they move the LLC under the trust, which is no problem at all. So it's like a little bit of a double protection, right? So the LLC, when I think of LLC, I think of a business structure, estate planning. I think of a trust, but overall, a lot of people put their regular homes and asset into a trust. People put their business property into an LLC. But yes, I also see a lot of people after they set up an LLC, they put the LLC under the trust, which is a very conceivable, objective as well. So I see that work out for a lot of people. But regardless, even if you don't put your property in LLC, you should always do a trust. Right? If trust is more robust, like I say, is a set of instructions how you want things to be done with your property, who's going to help take care of your kids, how your assets are being dispersed. Excuse me. And in addition to that, lawsuits and estate planning is very important. So when we talk about, you know, taxes and estate taxes and all, exemptions and all that, putting in a trust allow you to do a lot of things to qualify for certain program as you get older and you become, you know, just incapable of taking care of your own stuff. The trust has the power to do a lot of things as long as you have, the capacity to do to designate the trustees and the beneficiaries and all that. Sorry, guys, I'm getting a little bit of a chill right now, just talking too much, but I hope that makes sense. But anything deeper than that, as far as the trust information, I would say seek the attorney to go
So
into more
I know you
detail.
gotta go, bro. I shared your website, TitoFinancial.com, on the group chat. If you guys want to get in contact with him and his team, this is his website right here. Just go over here to the resources, get involved, contact us, put your info out, reach out to him, and in the message just say that you heard about him from Chia Talks, or anything, so that way he know that you came from here. And I'm sure him and his team will get to it. I already knew we were gonna go over and we weren't gonna be able to answer all the questions because again, we got so much more that I didn't even get to share with you, you know? So like again, just reach out to Tito or someone like Tito about your questions. I can't stress this enough. It is so important to have somebody like Tito on your team if you're really serious about your business. What, or even as a sole proprietor, eventually you're gonna want to move that from a sole proprietor into an S corp, and so you're gonna realize that you're gonna just kick yourself in the feet and say, how come you didn't do it sooner? Once you find out all the benefits, and trust me, the benefits are gonna cover so much more of the fees that you're gonna be paying to hire someone like Tito. I guarantee it. Okay.
Thank you. Thank you, brother Chia.
So
Real quick, my brother, I appreciate you and Lisa. I think the time has been long overdue, but let's do this. If there's a time in the future, and this is the craziest time for me, but we do what we can to help the community. There's no fee, no charges. I share with you that I can't really take any more clients, but I'll be more than happy to answer any questions you have. If there's really extreme cases where you cannot get any help from anybody, we're willing to help you. But it's not just myself, but we have a team of attorneys and accountants here that can help as well. But I would be more than happy, Chair, to get on your show again, maybe in a few week or month, as tax season become more fluid, and any tax law changes come up. We'll be more than happy to share with our community. But please always get a second opinion, and we do what we can. But I mean, again, our community gets better when we are more empowered with knowledge and facts. So let's get going with that.
All right, man. Well, you could go, man. Like, thanks again for your time, bro. I know you got a lot of work to do, so I'm not gonna take too much more of it. Thank you, bro.
Thank you, bro. Thank you. Take care. Bye, guys.
You take care, man. Just us, Lisa.
I know, just us. It just seems like we talk so fast to get as much information. Fans, I hope that you guys got a lot from that. I mean, it's so great. Tia and I, we are just so blessed to have Tito on our team. I think I didn't even get to go over everything that he's helped us with.
Yeah.
Before I came to Tito, I went to a big chain. I'm not going to mention it, but I went to a big chain. Not that they were bad or anything like that, but Tito saved us so much money. And again, you can amend it, has it up to 3 years, and he saved us so much money. And from that point on, I was just, hey, Tito, what do I do here? What do I do here? What do I do here? And if you have a good tax accountant, that's really where you can save money. I always say your realtor is the one that finds the dream. He's the dream finder for you. Your lender is your dream funder. Your tax person is your dream saver. Okay, so all of that, you need a team of people to really build that wealth for you.
Yep. And if you guys have not, again, I really mean this. Everybody that I talk to, whether it's friends or family or clients that are serious about starting a business, I always tell them, do you have your own CPA? Do you have a person that does all your taxes? Because again, you're shooting yourself in the foot on the long run by not having one, because you're going to realize, man, why didn't I hire one sooner? Because they could save you so much money, like what Lisa said. And not just that, but they could get you out of a pickle. You do not want to be on the radar of an IRS department. You do not want to be on the radar of that. Because if you are, guess what? You're going to be on their radar for many, many years in the future until they feel that they don't need you on their radar anymore. So having somebody like Tito is going to advocate for you. And he's even going to be able to go out there and meet with the IRS and do the appeal and all that for you, because he's the one that's doing your taxes. So find somebody like Tito by your corner if you are serious about your business. Doesn't matter if you're selling homes, doing loans, or having cars rented on Turo, whatever that might be, whatever your business, having somebody like Tito by your corner helps so much. And remember, we live in California. You can get sued for anything. So yeah. But with that being said, go check out his website. I put it on the chat, TitoFinancial.com. If you guys have any questions, you guys want to reach out to him, just go to his site and go through the proper channels. All right. Thank you guys so much for all your questions and comments. I am so sorry. I knew we weren't going to be able to answer all the questions. That's why I was trying so hard to speed through all of this. So if I spoke too fast, I apologize. Maybe we should do another part 2 when the tax season is slowing down for Tito, but right now it is very busy for him. He's probably going to stay at his office all night today because he took an hour out to be on the live stream. And he has his kids with him, and he hasn't eaten dinner yet, same with me. But so just maybe we'll have him back to answer some more questions. I don't know. You guys let me know if we should have him back or not. Because when it comes to taxes, I think there's conversations where it can last all night, all day, because there's just so much, right? And Absolutely. It is unique. It is unique to a certain individual. And with that being said, it's 8:13. I'm gonna let you guys all go. Thank you again for tuning in, and we will see you guys next time. All right, Chi Chi fans, peace out.